Well, the most recent book was called Hedge Fund Leadership, in which I talked about leadership issues in hedge funds. Many people who develop hedge funds start off as traders, or they start off as analysts and they become traders and portfolio managers and so on, and they rarely have developed the necessary skills for managing other people, and so they begin to add people, but they don't necessarily know how to get the best out of them. They don't necessarily know how to motivate them or empower them and so forth. And some people are better at it than others, but it's definitely a set of things that can be learned. I mean, where people learn how to listen, where people learn how to identify the strengths of the personalities of the people that they're dealing with and try to encourage them and help them to work around what they're good at. Some people are very thorough and very cautious, and they tend to make very good analysts. Some people are more prone to want to take risk, to act urgently, to sometimes maybe even be a little impulsive. They may make good portfolio managers because they're willing to take risk, they're willing to deal with uncertainty, they like the action, and they may be able to raise a lot of money, but they may not be able to manage other people. I talked to somebody the other day, and I said the critical thing for him was to hire somebody who would handle the management of the people in the firm, because that was not what he was skilled at. It's not that he can't learn it, it's that if he's interested in learning it, by all means do so, but not simply do it in a kind of crude way. I spend a lot of time dealing with communication and getting people to talk about what they really want, to express themselves, and also to listen to other people. And as simple as it sounds, it takes a certain amount of practice, a certain amount of willingness to discuss the larger issues about communication and collaboration and so forth. So as much as people are competing, they also want to be working for the common good. And it takes a certain level of maturity and a certain level of understanding to do this. Well, maturity, to some extent is having a sense of humor about yourself, not taking yourself too seriously, not having to have everything your way, recognizing that other people have a lot to offer, that maybe there is a lot you can learn from others, that you are well advised to pay a little more attention to the way people feel and to how you feel and so forth. So it really gets at what's been called emotional intelligence. And I think the most successful traders are the ones who've evolved to a point where they appreciate these larger issues and spend a certain amount of time dealing with that and encouraging the people on their team or in their organization to explore those kinds of avenues in order to improve their ability to function and to endure through difficult times. I mean, and recognizing that there's a lot of value in understanding your emotions and learning to ride them out and learning to use them as clues as to what's going on, and to try to kind of find the right balance to keep in order to be able to function as effectively as possible. It gets back to what I was talking about before, which is really why it's really advisable for people to get coaching and support from somebody who has some kind of objectivity. Most of us tend to be self-justifying and continually, if we're in a difficult situation, to kind of rationalize it and put a Pollyannish view on it rather than face the fact. If you've lost so much money, maybe it's time to pull out, reduce the size of your positions, reduce your investment, go to cash, preserve your capital, and wait until the situation's a little bit better and a little more positive before you get back in. But people don't want to admit that they were wrong. They don't want to admit that they're failing. They don't want to face that, and so they get into a state of denial and aren't able to adjust or adapt as well as they might.